Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about high energy batteries which can be big in a few years, but this is a high risk investment, so kindly take that on note. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about high energy batteries, a small request: kindly support me on Patreon, and once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company established in 1961, High Energy Batteries manufactures batteries for large air vehicles like aircrafts, helicopters, and UAVs. It has a market cap of around 240 crores, and that is the most attractive part about this company. The main customers of the company are the Army, Navy, and the Air Force. And as related to defense, it gets most government orders. They go through these companies. It's a high ROE and return ratios are pretty good for the company. In terms of the performance, the financials, so these are Q4 numbers, so which dipped a little bit. So sales went up by 9%, but profit dipped by 20% to 4 crores versus 5 crores. It's a debt-free company, but last 2 quarters have not been that great. Low promoter and institutional holding is there, I think, because of the low float as well as the market cap being so low at less than 300 crores. Return on equity of 45% is pretty strong, and margins at 19% has dipped a little bit from last year, but still is pretty good. In terms of the performance of the stock has been 5x over the last 5 6 years. It went up sharply, it went to 2000, 2600, and then has declined. So have corrected over the last 6 months and have corrected more than 50% in that period. Numbers have been subdued for the last 2 quarters, and that is primarily the reason why the stock has corrected from the top. It is in a niche space with very low or no competition, so one has to look at that. So currently trading at very attractive valuations. Demand will only increase as security of nation is first and foremost. In fact, for this government, we have seen that spends on ammunitions, armed ammunitions have only increased. So it looks like that there will be more orders that will be coming in for the next 2 to 3 years. So why I believe it is a compelling buy. India defense expense will only increase going forward. It is a requirement at the moment with the kind of situation we are currently in, with the kind of geopolitical situation that we are in. Need for better machinery and equipment is there and have been there, especially with the army over the last decade or so. There have been a lot of demand for the same. So I think it's about time that these things will get rectified. And valuations now are much better after the decline over the last 6 to 8 months. So it is currently trading at 14 times current earnings, 12 times 1 year forward earnings, which is extremely attractive. But one has to be patient with the stock from a 3 to 5 year point of view. It does not deserve to be only a 250 crore market cap company. It is in a niche space with high barriers to entry. I don't see many companies getting into this field and selling to government or selling to army or navy. It is extremely difficult to get into this space. So it seems like that this will continue to be a kind of a monopolistic or duopoly kind of a situation for these sort of companies. Order flow is consistent and it's expected to only grow over the next 2 to 3 years. In terms of technicals, stock has corrected over 50%, as I said, from the top and have been in a bear grip. So the strong support is around the current levels, which is 1250, 1300. These are very strong support levels. So hopefully the stock should stabilize around here. It looks weak on chart, so avoid taking a trade. I don't think this is a good trading pick. In fact, it's such a small company with highly liquid. So I would say just avoid trading, but investment from a 4 5 year point of view, if you have some spare money and you are able to take some risk, you can do that. So may consolidate even now going forward because the numbers have not been that great, but at attractive levels from a 5-year point of view. So, in my opinion, buy if you have a high risk appetite and keep track of numbers. Have at least a view, 1 year view at least. But I think if you have a 4 to 5 year view, that would be better because things will only shape up over that period. I believe over the next 18 months, things could be up and down, and some of the sectors may perform, others may not. So, wait for massive declines to buy. You can buy at these levels as well and have less than 5% exposure into such stocks. So this was a video on high energy batteries. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thank you.